Interest rates have been historically low for a number of years. As time went on, interest rates continued to decline, giving those with variable mortgages a better financial situation. They really felt like they were winning. Those with fixed rate mortgages have to refinance every so often and therefore have also benefited from the decline. But now that interest rates have increased, what's going to happen? You came here for the truth, so let me unveil that for you. Today we are going to look at why half of mortgages in Canada are at risk in 2018. Let's begin. Growing income inequality and polarization is now widespread across the GTA. That's the Greater Toronto Area. But this applies to many major cities. You can see here this blue area in the center. That would be the core of Toronto, let's say. And you'll see that this is the average individual income compared to the Toronto CMA average of $50,000. All right? So look at this. The very high area, the blue area, 140% to 831% of average. So understand that we're looking at the core for the moment. There's a grand disparity in between these areas within a very short distance. It's not like, okay, when you go over that bridge, everything beyond there is low income housing. And everything before that, that's all high income. It's not like that at all. Okay? Average income for where I have my little pointer here, $156,000. If I move over, $145,000, $261,000, $419,000. But if I move just east to that, all of a sudden, $35,000, $25,000, and it goes on, $22,000. There's more examples of this around the city too. It's not just the core of Toronto that is experiencing this, it's the suburbs as well. And this, where I've just pointed here, that's quite far away from the core. It's not as if it's just secluded to one area. Any city will have disparities. That's the way it works. It's always like that. But to have such a grand disparity just further solidifies the point that I always make. The rich get richer, the poor get poorer. It's very clear and evident in Toronto, and you look at that, as I said, in most major cities. This is not going to be resolved. In fact, I would like to see this with newer information because I believe that into 2017 this has become even worse. So I will cover that as I find it. A couple tidbits of information here. This area, the shaded area here, is Lake Ontario, and right around these regions here, this is, for example, where the dying automotive industry exists. So this is the Detroit of Toronto right there. And in this region here that I just highlighted, this is where the Pickering power plant is, a nuclear power plant that leaked radioactive water into the lake. And that's just so happens to be our drinking water supply. Thanks, Toronto. All right. Bank of Canada. Now this is the main topic for today. The Bank of Canada, the Central Bank of Canada, decided that there would be no issues. Everything happening with people's real estate right now is manageable for most. The Bank of Canada released its quarterly assessment of financial risks to the banking system, and near the top was household mortgages. Bank of Canada expects half of mortgage rates will reset over the next year, mitigating much of the risk. Don't worry about it. You're going to be able to get your mortgages and you won't have a problem. The only unfortunate part is that the average person is getting a variable mortgage rate. Big mistake. More than half of residential mortgage holders are expected to have their mortgage rate reset over the next year. 47% of mortgage holders will need to renew their mortgages over the next 1 to 3 years. They expect 31% and another 22% in the next 3 years. That's a big problem because a lot of these people are not able to afford their mortgages today. However, we are seeing variable rate mortgage holders already burdened by the small infinitesimal increases that they have done. The Bank of Canada knows this, and that's why they have been holding back on further rate increases, despite suggesting that the economy is doing very well. Look at the news. The market is doing well, economy is doing well, and everything is growing at a rapid clip. But you can't increase interest rates, and you have to continue to create all sorts of different stimulus packages. That's, not exactly something sane. Well, the old adage that if one thing becomes too expensive, people will choose the alternate. And that would be true in a normal free market. Look at what's happening with real estate. The housing prices have become way too expensive for people to afford, $1 million plus. And you'll see this as more and more people have been going into rentals, right? That's been going on for a while. The vacancy rate in Toronto is about 1%, and Vancouver, if memory serves correctly, is at 0.9%. So there's essentially no vacancies, right? The places will go on the market and for rent, they'll go on the market and just a few hours later, maybe at most a day or two in the city of Toronto, that is, will sell. Well, they'll be rented out. Okay, a day. That's all it takes. And as a result, rents are pushed higher and higher to the maximum that they're allowed to, of course. Now, many renters are struggling right now, and I have heard from people myself, talked to people in the industry. I know what's going on here. This particular individual is a former chief planner for Toronto, and she said this, and I do believe this is very accurate. Really, what we are talking about today is people who are able to be fully employed, but are not able to afford housing. That is a whole new problem. This is something I have covered over and over again, and I have been ridiculed, and that's okay because it's true. I don't have a problem with that. I'm just bringing out the truth. If people can't afford it, then how can the price be sustained? All of the intervention has caused this, and it's not a good thing, okay? Having your mortgages being $1 million is not a good thing, sorry to say. Canada's 1% gets another income boost. Wow, does that surprise anyone? The highest paid Canadians capture a larger share of the country's total income in 2015 as corporate dividends help boost their earnings. The average individual who makes, let's say, $40,000, $50,000 a year, they didn't really get a boost. But if you're making $250,000 a year, you certainly got a boost. The top 1% earners saw their slice of the income pie increase to 11% from 10% the previous year. And these numbers have gotten even worse with more recent statistics. They're only showing you here the 2015 numbers, though the article is from 2017. It's just going to increase. It's only going to get worse simply because of the way the system is designed. Wages compared to inflation, 1997 to 2016. Inflation went up 42%, eroding the value of anybody who is trying to save and anybody who simply doesn't have the capacity to get into different investments like real estate, for example. The best jobs right now, I found this interesting, was management occupation. That's what's happening here. I do believe that those in management salaries, if they're earning a lot of money, particularly in government, they're getting nice hefty bonuses, they're getting nice annual raises. If you work as, a general administration employee, you're not seeing those raises, I assure you. If you're lucky, you got 2% raise. Not even keeping up with the fake inflation rates. Worst jobs, this is manufacturing, laborers in manufacturing, and retail. That's what's happening here, and I know that exists in other places as well, like the US. The middle class is a funny thing, though economists don't have a single definition for it. The term does indicate a group of people who stand in the middle of the income distribution, and yet everyone, rich or poor, thinks they're middle class. That's interesting because many people do believe that. It's interesting to talk to people who are in the lower class of individuals who unfortunately are put in that situation, but they have been grouped into the middle class. Surveys have shown this over and over, both in Canada and the US. The one reason why politicians love the word so much, when they say middle class, they think they're talking about all of the voters, everybody. Well, the median household income reached $70,000 in 2015. That's according to the latest census data. That's the middle point of the national income ladder. Now you tell me for 1 second, please, if your income in your household is $70,000, but it's going to cost you, let's just say, $1 million to buy a home. The two simply do not match. It doesn't work out. You'll be paying off that home until they're digging your grave. It doesn't make sense. That's how you know something has become too expensive. It's a house. It's not supposed to be a speculative investment. You're not supposed to be able to make 20% profit in a year on a home. It's just supposed to casually go rising and rising as the values of the currencies are depreciating. That's the way this works, right? And you're seeing rates, let's say in the US, from 1970 to 2010, a 40-year period, the housing prices had increased approximately 10%, 10 times. But now, if the rate of this continues, I mean, people are already priced out. They can't even afford rent. So what's going to happen? It doesn't make sense. That when something doesn't make sense, you have to start judging it. But don't worry, because our politicians will be there to save the day. Google, Amazon, Netflix mount lobby crusade on Trudeau liberals. Amazon had, check this out, 99 registered contacts with the government last year. Google had 37. So Amazon, Google, Netflix, these FANG stocks are able to pressure governments into giving them tax loopholes, giving them all the benefits in the world, as long as they're willing to do deals. Yes, we'll build in your city, we'll create jobs, just give us lots of tax incentives. And I get both sides of it, I do really. But the average individual doesn't seem to get anything. So it's not really fair in that case. So I don't see how major institutions, multi-billion-dollar companies are able to lobby the government and get their way when it's not really on the average individual to get anything. And I'm not saying that we should give handouts at all. That's my point. No handouts for anybody. Government official held secret meetings, gave advice to pro-tax haven lobby group. A lobby group funded by 11 of the world's biggest offshore law firms reveal unreported meetings with senior Canadian officials. Oh dear, another situation unfolding. If you trust anybody, you'll realize eventually that you might get burned. So my advice to everyone is have no faith in any institution. All right. But times have changed, right? Well, how about that whole time frame? Freedom 65? Or did it used to be Freedom 55? Who knows? Today, though, that age looks to be 70. Many people are unable to support themselves for a long period of time after they finish work. So if they retire at 55, retire at 65, they need to be able to then last 15, 20 years, or however they believe that they're going to live for. They will be put into a very tight situation because the government's not going to help you out. That's just the way it is. And as the years go on, your money buys less and less. Now, Every dollar you don't spend in your 60s is a dollar that you can keep growing for your 70s and beyond. Delay tapping retirement benefits until the age of 70. She refers to Social Security, but same argument for the CPP in Canada. Lay the foundation to work longer. Talk to your employer. So you have to work longer. Now, many people, I've covered this before, but you know, it's 100% fine if you want to work longer. If you want to work till 70, 75, maybe until you go off to a better place. That's absolutely fine. I think we should all be productive, right? But should you be forced into working that age? No, I don't think so. That's the case. You shouldn't have to need to work. It should just be something you want to do to keep busy and everything else. But unfortunately, the way things are going, you're going to be forced into it. You're going to be barely scraping by, and that's the new world. That's the way it is. It's not freedom 55 or 65. It's going to be freedom 75 and then freedom 85 if you're lucky enough. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my books, The Money GPS, and my new release, Global Economic Collapse, even more informative. You can actually flip through these books at Amazon. Links are in the description below. Take care.